Good morning, traders. Welcome to Beyond Profile. Today is Tuesday, April 26th. And let's look at the bond market. This is something here on the daily that has been consolidating here in a very nice stage 3P formation. You'll notice over the last few days we've got a very nice consolidation after the move up back into this area here, and looking for actually a breakout and continuation here on the bond market. The high volume nodes moving and shifting to the top side here, so this is looking very nicely for it to make a move back up to the prior 122s and even back up here where we had the 123 area. When you get consolidation like this, you get your vertical move and you get your stopping price and acceptance of value. This just means that we've got an accepted area here where buyers are willing to step in at these levels, and those who want it cheaper aren't going to get it any cheaper, and they're going to have to pay up for it at these levels if they want to get on the train before it takes off again to the upside. So this is a great example of a little stage 3 continuation, and this is really the fourth. This will be the fifth day. This would be like the breakout day, if you will, of this stage 3, and looking for continuation. You got a naked point of control 2204. It looks like. And then 122.21 to the top side, another area where we had plowed back into these December breakdown area over here at 23 earlier. So looking like it wants to go back up. We had good earnings in Ford this morning. Ford Motor Company gapping up almost 4%. UBS blew out the street also. So a lot of good earnings still continuing to come in this morning, and hopefully we get a little bit more volume today than we had yesterday. Yesterday was absolutely just pathetic for volume and range in the markets. Let's take a look at the NAS and the S&P, because we're still back pushing against those prior highs here. About the S&P over the last couple of sessions here, and if you take a look at it and really just squint your eyes as to what's going on, you'll notice there's this blue box around it. We're trading in a value area. This would be a probe failure on the tsunami news underneath that area, and we snapped right up. Buyers stepped in to load the boat. We're coming back towards the prior highs. Technically, there's a naked gap up here. Would be the closing price of this bar. So on the regular session, have we gotten it? We're actually 2 ticks shy of it so far. We've not gotten the close. Wide range candle up. We've got our stopping price. We're starting to see some development around here also, which in fact could send this a lot higher from these areas. It's going to be tough to try to short this with a lot of good earnings. Tomorrow we've got the first of 4 meetings in the year for the transparency of the FOMC, the Fed, and that could move the markets in a big way one way or the other. If they hint that QE2 is done, there won't be a QE3, or if there's a QE3 coming, it just depends on what the verbiage is going to look like and sound like to the markets tomorrow when that number comes out. Today, again, we've got some good news, so your bias this morning's got to be at least to the upside short term here this morning, unless we get loaded with some supply at the top again here, because again they moved this market right back up to 37.50s this morning, and you can see we've actually come back 3 points already, 34.50s. So again, there's supply. As we come back to these prior highs, you can see what we had here. There was a lot of topping tails supply in the marketplace that pushed us back once before. So the thought process here of traders is that we're looking for the pushback again in this market as we get back to these prior highs. And the more traders we get short up here, the more of a move we'll get outside of this area if in fact they blow through those areas and take the stops out. It's going to be hard pressed to take a short at this 38 area, because we've come into it so many times now. As far as a responsive trade, that's kind of gone, and it's lost its favor, if you will. Would rather see a probe higher into the 40-42 area and then get a pull back into it. Would not do that area again, because it's losing its impact, if you will. Remember, it's first time into these areas always have the strongest impact for these markets. So this week could be interesting, as we're holding on so far to last week's move. These wide range candles pausing up here at these highs. The volatility has obviously decreased yesterday, and the question becomes are we going to sell off? Do we probe these areas and push right back down? Or do we continue on running higher? Because if we break out of this multi-month value area here, this thing could really rocket all the way to 1400 here, another 60 points without any problems. Because if you look at the range of this prior value area, let's take 1340s down to 1290, 1285 area. All right, it's just about the same measured move, if you will, to take us back to the 1400 level. So keep that in mind. Even though we're coming back to prior areas, traders are thinking, oh, let's short here. Just remember that When we get through that, people can get run over, stops get taken. That means more buying pressure. And the only way that we come back through the value areas is if it fails on a probe and comes right back into the prior value area. Okay, folks, have a great trading day. We'll see you in the room.